Hey guys, welcome to the very first video of Brand Device. I actually have no idea yet how the entire setup is going to look like, so we are going to start very simple with this live stream setup because a lot of things have been changing in the last few weeks. I think like if I miss out this time and like kind of like telling you what exactly you should be doing to make the maximum out of this downtime, it would be a big mistake. So that's why I just wanted to get started with this. This thing on the left that you see, this is my portfolio on Trade Republic. So this is the app, this is how it looks like. My phone screen here, you see Trade Republic. And in that you can see like how much money you have invested, how much money you have left. So this nicht investierter Betrag, that's 254. That is something that I haven't invested yet. Then afterwards you can go to the second tab and then take a look at all of the different kind of stocks and stuff. Then on the third one you take a look at the Sparplan, they are said in German. But like for example, if you have some kind of monthly amount that you want to save out, that you want to like invest in the stock, so like that is there. So the story is that like as soon as I turned 25, which was like 1st January, this year, I was like, I'm going to invest the 200 euros that I received from Alina's family into the stocks right away. So this is what I started. So like from that day onwards till today, I've invested around like 9,000 euros. And this was all of the money that I've previously saved up. But because of all of the negatives in the past few months, in the past few weeks, you see that it's not really 9,000 right now. It's like, 6,000 something. But if I show you the actual number, let's say in the week, in total, 2.25% of the entire investment has gone down, and in the month 22.25%, and in the year it's like 21.6%. So like almost 1/5 of the money that I put inside went down. And stock markets are heavily affected by any kind of insecurity, and coronavirus, this entire story, this is crazy. Like nobody knows what is going to happen, and this is the reason you see some massive ups and downs. Now if you take a look at any kind of individual stock, let's say Amazon, alright, today has been doing really good, but over the month it kind of like also fell heavily. In the entire year, of course, it again is better. It's really important to like check different kind of like timelines so that you get an idea of how well the company has been doing. Facebook, the week has been better, 1% plus, but in the month it's 30% minus. What is the important thing to remember here? The important thing to remember is, first of all, if you like rely on any one company, like if you just put all of the money that you have in just one single company, the chances that your money is going to go up and down like in a crazy way gets a lot worse. What happens with MSCI World, like you see this MSCI World Core, and then you see the MSCI Emerging Markets. These are the two ETF or exchange traded funds which have the stocks of a lot of different companies. Now if you would just Google it, you would see that the MSCI World is a market cap weighted stock with the market index of 1,644 stocks from companies throughout the world. This diversifies all of the risks that you would have otherwise in a really crazy way. So this is actually really nice. You don't have to then depend on, for example, let's say here you have just, let's say Tesla, the stocks are going up and down, and within a day, like sometimes it's like 12% plus, or sometimes it's like 55% minus. And in the entire year, of course, it has been better. But in a month, for example, Tesla made 55% minus. Let's go to some other one. Let's say Microsoft. Does it have Microsoft? Yeah. So Microsoft in a month made 24% minus, like comparison to like what you had around like 55% with Tesla, right? So if you had the money, for example, only in Tesla, you would have 55% minus. If you would have money, all of your money only in Microsoft, you would have 24% minus. But if you had your money in an ETF, which is a combination of all of these different stocks, now these 1,644 stocks from different companies, then some days some companies are having minus and other companies are having plus, whereas on the other days some companies are again like having plus and others are having minus, and so on. So you essentially have a very nice averaging effect. That means your money doesn't dip down very quickly, and your money also doesn't go up very quickly. Like, of course, that's a drawback, that the money doesn't go up very quickly, but the benefit is that you don't have to kind of like stay awake the entire night, kind of like keep reading in different kind of finance news and stuff like that. You don't have to do that. You, by investing in an ETF which has a lot of different stocks under one single stock, then you're like kind of like more relaxed, because you will always be experiencing averaging effects of all of the different stocks, right? So one stock of MSCI World will comprise of 1644 stocks of the companies that they have mentioned here. These 1644. You can also always take a look at the PDF that the MSCI has on its website. The MSCI World Index captures large and mid-cap representation across 23 developed markets. So MSCI World Index, it's like essentially from the developed market. For the emerging markets, if you see here, they also have a separate, index that I have been saving for, if you would like take a look here. So this one here that you see, this is the emerging markets, but I kind of like don't really like it because it has been in kind of like more minus than most of them. And also, like, if you take the maximum duration of like almost 5 years, you see that it hasn't like yet been like performing that well. So I'm not so like happy about it, but you never really know, because many a times maybe China and India blow up and then afterwards you have like a lot of market capitalization there, then you would be able to benefit from it. Now, so like this is the reason like you essentially should do 70-30. Like this is something that is recommended by most of the investors, but I haven't really done it. Like I'm like still going with the developed market, and then maybe afterwards when I have some money left aside, then I put that money aside in the core MSCI, so like the emerging market stocks, right? And here when you see like 41,82, this is like the one stock which has 1644 stocks of other companies which it covers. The app I actually absolutely love. I think like the interface of the app also like got me more interested into like trading, because otherwise I wouldn't have been kind of like, maybe I wouldn't have trusted myself with so many numbers floating around. And with the app, it's like super simple, and whenever you have to like kind of sell something, you can just directly click on Verkaufen, and then you can put how many like of these do you want to sell. I have 147 stocks, so if I sell all of them, I would be able to get the 6,100 something that I invested. But of course I don't want to do it, because right now I've lost in the year like around 21, not even in the year, like I just started investing in January, so around 22% got lost. But the fun thing is, like, this is the fun thing about investing on different times, that you're not only able to like benefit when the market is up, but you're also able to benefit when the market is low. And that's called the cost averaging effect, that you are investing when the stocks go low, you're investing when the stocks go up. So like over the long run, like market, because it generally always goes up, and what does like market going up means? Market going up essentially means that all of the companies are trying to improve. They are trying to get better. They are trying to earn more money. And this is something which will always happen. No matter like how much in future do we go, never it is going to be that a human says, I'm not going to do anything today. I'm not going to try to improve something. There are always going to be, these companies who are going to like innovate, who are going to like push the boundaries. And this is what the entire stock market depends on. So it kind of depends on your belief that the world is only going to optimize, is only going to improve, is only going to like figure out how to solve new problems. And this is the reason like I'm really never worried that the market is going to go down in the longer run, even when you like see such crazy kind of scenarios. Like if you take a look at this just 1 year scenario, like anybody who started investing around this time peak, and I started investing here. So for me, of course, like it has been quite an experience, but like other investors who have been in the game like for a long time, for them, like it's not such a big problem. So this is the reason, like whenever you start investing, like you just put the money inside once, and then afterwards you kind of like buy and hold. Like you hold for the next 10 or 15 years if you're investing in an ETF, because otherwise your money would be like better saved in some kind of like, checking account or some kind of Tagesgeldkonto we have in Germany. So like there you can put some kind of money aside and you get like around 0.5% to like, 0.6%, Well, I don't even know if it's that much. We can just take a look real quick on the Tagesgeldkonto-Vergleich. We can take a look at what kind of interest rates they're giving, and it's, man, just 0.31%. And especially like many of the students who are like from, let's say, developing countries, they see the interest rates which are really, really high, like up to 7% sometimes. Like 3 to 7% is nothing that is not heard of, right? But in Germany, yeah, like you have negative interest rates, and if you have any interest rate whatsoever, it's very low, like from 0.1% to like 0.3%. So it doesn't really make sense to like leave your money there. If you're like investing long term, then like of course you should be like taking a look at different kind of stocks. Or if you're a passive investor, you don't want to like stay awake all the time and like kind of read through the reports, then just a nice index fund is really nice. Or an ETF. So this is the broker that I use. It's called Trade Republic. I personally absolutely love it because like it is extremely simple. Like if you take a look at the interface here, like I'm in total love with this. It's really nice. The customer support is also very nice, and if you have any kind of questions whatsoever, you can just send them an email. It does take some time, but yeah, like they are still a young company, so like I don't really kind of hold it against them. The best thing about this brokerage is that you only have to pay €1 fee. If you take a look at my receipts here, you will see that there is a fee, Fremdkostenzuschlag, which is €1. If you take a look at right here, this €1. And that's really, really nice, because if you take a look at any kind of other depot, it is always going to be more. And also they have completely free Sparplan. Sparplan I showed you here on my phone. Like these are the Sparplan. That is like some kind of like a free contract that you can put on, where you are like investing some given amount of money every single month automatically. So for me, this is like the core MSCI here. MSCI World is €350, and then the emerging markets I'm putting like €150. So that is the story. But otherwise, if you're like buying actively, for example, if I go here and then I click Kaufen, then like of course they're going to charge like €1 or €2 and so on. Sorry, €1 only. But if you have some kind of other depot, let's say Comdirect, because the problem with Trade Republic could be that from many nationalities they are like still not accepting the opening of the bank accounts. So yeah, that's a bit sad. But if that's the case, you can always go to Comdirect. Comdirect is like a sister company from Commerzbank, and they have actually like free depot. You don't have to pay any kind of starting fee whatsoever, and you also have the kostenlose Depotführung for 3 years at least. Now, and maybe in 3 years you have your permanent residency whatsoever in Germany, and then you can like switch over to Trade Republic or any kind of other offers that come at that time. Then you have €3.90 per order now for the first 12 months, and then again it changes. But I think for the starting, like it is a really nice way to like get started with the entire story. You have your Sparplan, like the same thing that you can save per month. You can do it already after €25. If you want to like take a look more about the entire like the conditions and everything, you can like read these. Like these are like really interesting things. Maybe I will also like do some kind of like more detailed guide about these things, but I think to get you guys started, just to take a look about like what is the entire scenario right now and what kind of like these depots are there, I wanted to make this video. And also like how things are kind of changing and how things are like going down or going up right now. Yes, it's kind of like screwed up how quickly things are falling, but once things stabilize a bit, they're also going to jump back up at the same speed. When the stock market was doing completely fine and the price was still like around 57.87 per stock of MSCI World, and I was only able to buy 34 stocks of that, which is like kind of not so nice, because like it's still like less amount. But if you take a look at this, when the entire corona crash is coming, then for the same amount of money, almost €2,000, I've been able to buy 48, whereas here for almost €2,000 I was only able to buy 34. So almost like 14 stocks which I kind of like got for free, and all of these stocks that I bought cheap are of course going to, you know, like give you some nice returns afterwards. Let's say you have 41,59 and here it was 57,87. Let's make it 42. Let's make it 58. So for the difference, 58 minus 42, so 16. So these 48 stocks were bought at a difference of 16 euros less. And now when the stock prices come around the same level where they were before the crash, you know, like when you see this entire story here, maybe they will be coming back around here, now around 55, 50 or 60. Then you are already going to have some kind of profit of around 768 euros just because you bought it cheap. And then afterwards, of course, there's only going to be an upward journey. Now, so like these are really important. If you have some kind of like money saved aside, it is extremely important to like remember that whenever there's any kind of crash that comes, like there are some kind of massive opportunities that you can take a look at, and you would be able to kind of like make some money in that. If you have some money put aside, this is like a great time to kind of like start investing, or at least like read a bit more about it, because that way not only are you like building some nice foundations for yourself right now, but also like afterwards, because like jobs aren't always some kind of security. If you take a look right now, like so many people are being laid off, and this is the reason like you should have some kind of like savings on the side and some kind of like extra money that you want to like, you know, kind of save in the stocks already. This is what I wanted to share with you guys real quick, and I hope that you guys learn something from it, that you like kind of think about starting your own depots. If you haven't yet, you know, started your depot, I think it is going to be kind of like really nice if you take a look at Trade Republic, you take a look at Comdirect. Both of these are really good depots. Then afterwards there's another one which is called OnVista. That is nice. You can also take a look there and take a look at two different numbers. Now the first one is like how much is it going to cost if you're doing a Sparplan where like you're saving money monthly, that is even when the market goes up or the market goes down, or when you are buying some stocks. So like how much money is it going to cost then? And also if you have some kind of other cost, let's say monthly costs or some kind of yearly costs whatsoever, like kind of like take a look at all of them. Otherwise I would like make a video in the coming days so that you have a nice idea. But I think for now you can get started with either Comdirect or Trade Republic and really like kind of not leave this time, because this time is full of opportunities and you just have to be the one who kind of like grabs it and like holds on to it. No? So do that. I will put all of the links in the description, and yeah, if you have any kind of questions whatsoever, leave it down in the comment section, and I will have maybe a live session next time so that, you know, we can have more of a conversation than just one monologue. Alright then folks, thanks a lot for watching the video. I'll see you in the next one. Bye.